Real-life applications of disability insurance explained. Insurance exam prep. Question 1. What is the purpose of key person disability insurance? To pay the key employee's medical bills, to provide income to the key employee's family, to compensate the business for the loss of a crucial employee due to disability, to fund a retirement plan. It protects the business by providing funds to hire a replacement or cover lost revenue when a key employee is disabled. Question 2. Are premiums for key person disability insurance tax deductible for the business? Yes, fully deductible. No, they are not tax deductible. Only if the employee dies. Only for the first year. Premiums are not tax deductible, but the benefits received by the business are tax-free. Question 3. A disability buy-sell agreement is used to buy medical equipment, fund the buyout of a disabled partner's share of the business, pay the disabled partner's salary, sell the business to a competitor. It provides the capital needed for the healthy partners to buy out the disabled partner's interest in the business. Question 4. The elimination period for a disability buy-sell policy is typically 0 days, 30 days, longer, example 1 to 2 years, lifetime. It has a long elimination period, 12 to 24 months, because a partner's disability must be deemed permanent before executing a buyout. Question 5. How are benefits from a disability buy-sell policy taxed? As ordinary income, as capital gains. They are received tax-free, subject to estate tax. Because premiums are not deductible, the lump sum or installment benefits are received tax-free to buy out the business interest. Question 6. Which policy covers the ongoing operating costs of a small business if the owner becomes disabled? Key person, buy-sell, business overhead expense, BOE, workers' compensation. BOE covers fixed expenses like rent, utilities, and employee salaries while the owner is disabled. Question 7. What does a business overhead expense, BOE, policy not cover? Rent, utility bills, the disabled owner's salary, leased equipment. BOE pays for business expenses but specifically excludes the disabled owner's personal salary or profit. Question 8. Are the premiums for a business overhead expense policy tax deductible? No. Yes, as an ordinary business expense. Only for corporations. Only if benefits are taxed. BOE premiums are tax deductible for the business, but the benefits received are taxable as income to the business. Question 9. If an individual buys a personal disability income policy with after-tax dollars, the benefits are fully taxable, tax-free, partially taxable, tax-deferred. Because premiums are paid with after-tax money, individual disability benefits are tax-free. Question 10. If an employer pays 100% of the premium for a group disability plan, how are benefits taxed to the employee? Tax-free, fully taxable as income, tax-deductible, only taxable after 6 months. Since the employer deducted the premium, the employee must pay income tax on the benefits received. Question 11. If the employer pays 60% of a group disability premium and the employee pays 40%, what portion of the benefit is taxable to the employee? 0%, 40%, 60%, 100%. The portion of the benefit corresponding to the employer's contribution, 60%, is taxable to the employee. Question 12. What rider provides additional income if the insured is waiting for Social Security disability benefits to begin or is denied? Cost of living adjustment, guaranteed insurability, Social Security supplement rider, SIS, return of premium. The SIS rider pays an additional benefit to replace or supplement expected Social Security benefits. Question 13. Which rider refunds a percentage of premiums paid if no claims are made after a specific period? Waiver of premium, Return of premium, non-cancellable rider, impairment rider. Return of premium refunds a portion of the premiums, example 80%, after a set number of years, minus any claims paid. Question 14. The COLA rider in a disability policy is designed to increase the premium annually, increase the benefit amount to keep pace with inflation, lower the elimination period, cover medical expenses. COLA adjusts the disability benefit upward based on an index like the CPI to protect purchasing power. Question 15. This rider allows the insured to purchase additional disability coverage at future dates without medical underwriting. Guaranteed insurability rider, waiver of premium, presumptive disability, rehabilitation benefit. Also known as future increase option, it guarantees the right to buy more coverage as income grows, regardless of health. Question 16. Loss of sight, speech, hearing, or two limbs automatically qualifies the insured for full benefits under total disability, presumptive disability, partial disability, residual disability. Presumptive disability assumes total disability for specific catastrophic losses, often waiving the elimination period. Question 17. If an insured returns to work part-time after a disability and earns less, which benefit makes up the income gap? Total disability, residual disability, presumptive disability, workers' compensation. Residual disability pays a percentage of the lost income if the insured is working but experiencing an income loss due to the disability. Question 18. The definition of disability that provides benefits if the insured cannot perform the duties of their specific regular profession is any occupation, own occupation, presumptive disability, residual disability. Own occupation is the most liberal definition, paying benefits even if the insured can work in a different field. Question 19. The definition of disability requiring the insured to be unable to perform the duties of any job for which they are suited by education or experiences. Own occupation, any occupation, partial disability, specific occupation. Any occupation is a stricter definition. If you can work in a related field, you won't receive benefits. Question 20. A waiting period often found in disability policies that applies only to sickness, not accidents, right after the policy is issued is the elimination period, benefit period, probationary period, grace period. The probationary period, typically 15 to 30 days, prevents adverse selection by excluding sickness coverage immediately after policy issuance.